Alright, so let's take a look at the trade that I took this morning on gold. Alright, so let's start on the daily. Alright, so coming into today's session, I was real quick with the analysis. I was able to tell that we were bullish. Alright, so I dropped down to the 4 hour. Alright, and the first thing that I do is just draw my ranges. Alright, so we had this range here, okay, and then we had this low here. Alright, so I drew a range there. Those are my ranges, and then what I always do next, come down to the smaller time frame, so on the 1 hour, and I really just adjust those ranges. Alright, so we can either have them here, or if you want, you can have them up here. Alright, so let's put them down here for right now. Alright, so this is where we were at. Alright, so if we drop down to the smaller time frame, the 15-minute. Alright, so what time was this? This is about 6:30. Alright, so I came into the market around here. Alright, so I see we had this breakout here. Alright, so we had this breakout, and then we had this next candle on the 15-minute. Alright, now we could have entered here, right, on a breakout move. Alright, so let me show you a good visual representation. So right here, we could have entered on the breakout. So as you can see, we had broke out that range, and then if you wanted to, you could have entered on the break of the low, and then put your sell stops on the break of the low, and then just ride price down. All right, but with the bias being bullish, I didn't want to do that. I wanted to see price create a top wick on the higher time frame. All right, and then on the lower time frame, that would have had price create a new resistance, and then I would have entered on the break of the low on the move down. All right, so another visual representation of that. One second. All right, so another visual representation would have been this move here. So we would have had to break on the higher time frame breakthrough, and then we would have wanted to see price create a new resistance on the 15-minute, and then we would have entered on the break of the low of on the next candle. All right, with our stop loss on the previous candle. But since we didn't get that, my next analysis. All right, so we had this zone here. All right, so we had this zone, right, and then we also had this wick down here, right? So I wanted to see how price would react to these two levels. All right, because since we are bullish on the day, I wanted to see price hit one of these levels and then bounce off. All right, that's exactly what we did here. All right, and then so the play that I was looking for was a inverted celery. So again, visual representation of how that looks. Since the daily bias was bullish, right, so we had price react to this zone, right, and then as on the higher time frame, as it wicks up, we would enter on the break of the high on the previous candle on a lower time frame. All right, so if we drop over to top step, all right, so you can get a better representation. All right, so as you can see, we have price come down, we have price test that zone. All right, and then as price came down and created that bottom wick, right, I wanted to see price come up, and then I was going to enter on the high of the current candle, right? So as when price came up, tap this in, all right, and then my TP, I entered in with 5 contracts, so pretty aggressive, and then my TP was at the low of this zone here. All right, and then I took off 4 contracts, left 1 runner, and then I decided to close that last contract at the low of this candle here. All right, so as you can see, price eventually came up, tapped this out for full profit at our TP2, and then it kept going a little bit, but eventually proceeded to the downside. All right, so that was the trade for the day. And then I'll also show a video to give a good representation on how I was managing the trade. All right, and then again, this is the move that we were looking for, an inverted celery. So we had price come down, test that range, all right, and then it wicked, and then on the way back up, as it's coming down, we place our buy stops at the high of the current candle, right, and then as price is coming up, it taps us in, and then we ride price up to the next target with our stop loss at the previous candle's low. All right, and then you can either target the next range or where you feel liquidity is at. All right, so again, I'll show a video of that entire trade now.